Today's conversation is all about the outlook for copper in 2024 and what that means for Amerigo's cash returns to shareholders. I'm joined by Aurora Davidson, Amerigo's longtime CEO. And to start things off, I want to ask you about this week's production results and what that means for the balance sheet. Given your increased production guidance for 2024, do you expect your cash balance to increase throughout the year? And if it does, what will that mean for shareholders?
Sure, Duane. Yes, I do expect cash generation at Amerigo to increase this year. As you know, our 2024 guidance reflects annual copper production back at our normal levels, which are north of 60 million pounds of copper. What drives our generation of operational cash flow once we have that stable production are essentially copper prices and to a lesser extent our cash costs. We will be talking on our view on copper prices later in our conversation today, but ultimately the timing of when higher copper prices will start to kick in is not under our control, but we have much more control over our costs. And our 2024 guidance indicates a lower cash cost. We're guiding for a cash cost of $2.08 per pound compared to $2.14 in 2023. So that is one advantage. Another advantage is that in 2024, we're back to our normal level of low capex, low sustaining capex. If you recall, in 2023, we had a high capex year. We built a new sump. We invested in risk mitigation projects, but our capex is guided to be 8.6 million lower in 2024 than in 2023. And that obviously is a big kicker for free cash flow to equity. Our news release, which we released just today, indicated that with the production results in Q4, we added $3.1 million to our cash balance in the quarter after the quarterly dividend. Now, keep in mind that we were still in a high capex year when we did that. So, in short, as Amerigo generates more cash flow from operations, which we expect to do in 2024, that gets translated to higher returns to our shareholders.
Now, when Capital 10X thinks copper, we think Amerigo, as everybody should. With that in mind, there's been a lot of buzz recently about the impending global supply shortage of copper and the parabolic price response. We've spoken about this with you many times before, but have your views on copper prices changed at all? Where do you see copper prices going this year and the next?
Well, I think we last spoke in October of last year, and at that time, the International Copper Study Group came up with their study, with their forecast for what would be happening with the copper market in 2024, and they were speaking of a surplus of about 500,000 tons this year. I never believed that could be true. I took a contrarian view to that, and that position that I had was confirmed later last year, mainly because we continue to face disruptions in supply. We have the Cobre Panama operation shutting down with 1.5% of copper supply shutting down with it, and we had guidance revisions from major producers saying, I don't expect to produce as much copper in 2024 as I once thought I would. So the current consensus is that we will not be having a surplus. The consensus is we are expecting a deficit in the copper market in 2024. And while copper prices so far this year have continued to trade sideways, I don't think that will continue for long. We are expecting solid demand from China. We're expecting solid demand from the Western world. And at the same time, we continue to see that getting copper mined and copper concentrates available to the smelters will continue to be a challenge. And that has been confirmed by a simple metric, which is the smelter and refinery charges coming down in 2024. The smelters need concentrate, okay? So as recently as last week, new reports have been revamped and updated to current conditions. And what they're now saying is we will be facing a deficit. The consensus is we will be facing a deficit in 2024, and we could be facing structural copper deficits on an ongoing basis, going into the 2040s, going into the 2050s. This is quite compelling, depending on how swift the supply response is. And that's a catchphrase. Let's look into that. Swift supply response. The supply response cannot be that swift. And we've spoken about that before. This is not a desktop analysis where you can say we need more material, the price will increase, new projects will be incentivized, we will build up new copper mines. All the hurdles that are associated with building up a copper mine. We have permitting, we have environmental, we have social engagement and social license, we have construction hurdles, right? I mean, the project lead time currently to build a new copper mine is 12 years. So there is no such thing as a swift supply response happening in the copper market, where on the other hand, we are expecting structural deficits coming on. So that translates to my continued belief in copper prices, and I do believe that very exciting times for copper producers lie ahead starting this year.
In 2023, we saw Amerigo pause its share buybacks after very aggressive share buyback programs in both 2021 and 2022. Will we see the company return to aggressively buying back its shares in 2024 like it has in the past? And to expand on this question, will we see the company's first performance dividend this year?
Duane, as you know, we are a very shareholder-friendly company with a capital return strategy that has a very fundamental principle, which is we don't need growth capital. And because we don't need growth capital and we generate operational cash, we are returning that capital to shareholders. Now, the cornerstone of our strategy is a quarterly dividend. That dividend takes precedence over everything else, and you saw that with our production challenges in Q2 and Q3 of last year, we protected that dividend, and we are now building back our cash reserves, our cash war chest, so to speak, to the $25 million level, where we feel comfortable we can continue to protect the dividend through any market cyclicality, short-term market cyclicality. Once we approach that level, we will again be at the crossroads where the board of directors of Amerigo will be making the decision based on the information we have from the market at that point in time, whether it is now prudent to restart buying back shares or declare a performance dividend, or both, because both could happen at the same time. I don't think they would compete against each other. The fundamental driver here to trigger those decision points and the timing of those decisions is what is going to be happening to copper price. Now, the decision is not will we return capital to shareholders, it's just how we will return capital to shareholders.
Amerigo's been outperforming its copper peers for a few years now. Can you speak to why that is the case and what types of investors have been attracted to the company?
Yeah, Amerigo in a way has been a steady Eddie stock for several years now. Even the disruptions that we faced temporarily in 2023 only had a minor dent in terms of our buyback activity, but our dividend was continued, and our share price continued to perform quite well as well. I think that has to do with a number of reasons. One of that is our operational track record, where I think the market recognizes that we're a company that is doing what we say we're going to be doing. We also have an advantage because we have low sustaining capital requirements. And that is quite significant when you compare it to companies that are that have high capital requirements in a highly capital intensive industry such as mining. The third aspect would be our capital return policy. That capital return policy is now going into its third year, and I think the market is recognizing that it's consistent and predictable. So we're attracting more yield investors as that policy becomes more known. And of course, there's Amerigo uniqueness as a story as a company that has that leverage to copper price, but does not carry the traditional mining risk with it. So it's an important double whammy that has helped us tremendously. So that basically is my view on why we've been doing the stock performance that we've had in the last 3 years or so.